Hello, everyone. I want to talk about the real estate market and what's going on. I'm going to give you the typical thing here. I'm going to give you the opposite of what everybody else is telling you. Everybody's saying that the sky is falling, the real estate market is crashing. Listen to Reventure Capitalist. He'll tell you how it's crashing all the time. There's a bunch of guys saying the Florida markets are crashing. And I'm going to just show you today this is simply not happening and why it's not happening and why the real estate market has big pent up demand and why it's very strong compared to what people think, despite the fact that we have higher interest rates, more than double what they were last year. The great news is they're turning, they're heading back down. And again, that's because of the banking crisis and everything going on with Silicon Valley Bank, Signature Bank, Credit Suisse, and others. And I'm sure there's going to be more to come, more chaos, more carnage. It's going to affect the stock market, it's going to affect the crypto market, it's going to affect the real estate market, but it could affect them in a very good way too. As the flight to quality goes, people pull money generally from the stock market if there's uncertainty and they put it into the bond market. The 10-year T bond is what mortgage rates are based off of. But usually people buy the 30-year 15-year, 10, 5. There's all different ones they could buy depending on the price points, but this will all help the real estate market because mortgage rates will then dip. Mortgage rates dip. Then people can afford more house. And we have huge demand for people out there to buy housing right now. And the media's not talking about that. And we have very low inventory, around 418,000 homes currently on the market. So with all that being said, I'm going to show you some data. I'm going to give you some info here to just back what I'm saying. And we are going to start with, let's see what we got here. All right. The heat map. And the heat map tells you almost everything you need to know. This might be the most important one for you guys to look at. So with this map, if you look at it, what is the bright red state, the one where everybody's been fleeing to? That would be Florida. So more than 39,000 people were searching to move to Florida as a state versus out of state, right? More people, 39,000 more to move here rather than move away. You go to Texas, 13,000. Again, great jobs there. Arizona, 9,000. Nevada, 7,000. South Carolina, 7,000. North Carolina, 7,000. Tennessee, 8,000. And the markets I am really hammering as a investor right now would be Florida, 1, Texas, 2, South Carolina, 3, North Carolina, Tennessee, and also Ohio, Michigan. And I do like Indiana as well, even though Indiana has more people looking to move out. It's just a very affordable market, and there are areas that are great to buy in. But these, if you look at the heat map, that's where you want to invest. This is, as a real estate investor, these areas you want to focus. What do you want to avoid? California, like the plague. Most of the Northeast, especially New York, where 23,000 people looking to move. Look at California, 41,000. They already had the biggest mass exodus ever. New Jersey, Massachusetts, a lot of people looking to move out of there. Pennsylvania, West Virginia, Virginia, especially the D.C. area, and Kentucky. So these are the areas where people are looking. Top 10 markets where people are all leaving. San Francisco, New York, again, a lot of these Silicon Valley ones. San Francisco and Denver, Silicon Valley, Seattle, same as that. And then just big, this is Hartford. If you look at Hartford, if you look at Boston and New York, you're basically Wall Street moving down to Miami. And Miami's been hot and on fire. Where are people moving to? Miami, as I just said, right? Number 1, Phoenix, number 2. Again, these are the two things that these have in common too, between Florida and Phoenix. These are retirement areas. And think about this for the next few years. You're going to have a lot of baby boomers retiring over the next decade, really. That people that have not moved down to the Sun Belt, if they want to move down to the Sun Belt yet, will be moving over the next 10, 15 years. So that's why you're going to have a steady inflow to these markets. Jobs in Texas will keep a steady inflow there. Same with Tennessee. Affordability will keep the Carolinas great, parts of Georgia as well. Georgia's got its own little inner demons about it. Atlanta's one market and the rest of the state's totally different. Anything down here, though, it's affordable in Alabama, it's affordable in Mississippi, affordable in Louisiana and Arkansas. Missouri, and these are places where people are moving to. These are all solid investor markets, including Ohio, surprisingly Maryland as well, and even Delaware as well. Affordability. And I don't mess too much with Maine, although I've done some, and New Hampshire, Vermont, I won't ever touch again. But I understand why people might like that as a remote place. There's a lot of skiing, a lot of hiking, a lot of activities, beautiful outside, certain times of the year. So I totally understand why people are going to those areas, but there's certainly no reasons to want to be in here in these areas. And same to the Midwest to an extent. Colorado's a beautiful state. I'm a big fan of it, but because Silicon Valley and the tech industry getting hammered, Denver is getting hammered as well, more so than other markets in Colorado. And Utah's just got too much inventory in around the Ogden and Salt Lake City areas. So you've already had your big inflow from California, and now that's kind of exiting. Same with Oregon here. So look at the heat maps. They will tell you a lot. And let's go to Zillow and some of their data. And I'm going to put a more in-depth video out on that this week. Pendings are down 19.1% year over year and down 5.4 from February of 2020. So we're going back a few years there. Home sales have gone up from January to February, which is interesting because actually mortgage rates actually increased during that time period. So some interesting data there. Let's look at the investor, what investors are doing. And again, I will have another video on this, so I'll go into more detail. Investors in 2020 during COVID plummeted, fell off the face of the earth. This is where I bought a lot of inventory, ended up being the right gamble, and it was just a gamble, a guess, a hunch. I did look at that a little bit, but nowhere near as much as I do now. Market shot up, investors, then rates came increasing big time, and investors exited. And I, on this downward trend here, really started buying a ton of properties over the past few months. We'll continue to. And now look, the investor sentiment is starting to go up. I expect that to continue and lead into a nice, solid spring market. So that's kind of what I'm expecting and what I am seeing with the market here. Again, this is investor sentiment. You see new construction versus existing sales, new construction pricing versus existing pricing. And the pricing has come down from its peak of $425 in May of last year down to $368. So that's a positive sign that affordability. But I do expect this to take a little turn back up here for the spring market before it does its typical, you see up, down, it's going to continue and then it'll go down again. 2024, I have no idea what it's going to be like. I do feel 2023 is going to be solid going into the summer, and the summer may shift, and it might shift rather rapidly. It depends on inventory, depends on rates primarily, and what's going on in the world. Is the world melting down? Is there huge unemployment? Things that we just can't envision or know what's going to happen. I mean, we have a feeling that we're going to hit a recession, but I have a feeling a recession is going to be much harder hitting when it hits, and it's going to be more sudden. It will rattle the real estate market, but as long as rates are low and inventory is low, real estate in many areas will not be hammered, but it will go down, right? You'll have areas that get 20% down. You might have other areas that are 5 or 10% down. But when you factor in the rate of inflation, the price, you can kind of look at it as you're losing value, even though the price isn't losing value, right? The price might be stable, but because the rate of inflation, you're actually losing with real estate. George Gammon did a great video last week on that. Definitely recommend watching that one for sure. But some good data here. Let's look at the Florida market here because that's what's on fire. And you have this is astounding to me and surprising. I expect it to be up a couple percent, but the fact that it's up 4.9, almost 5% year over year, especially when you consider that mortgage rates were last year at this point around somewhere between 2.75 and 3.25 around this time of year, maybe 3.5 edging up to, and now they're 6.5. They were close to 7. and we are actually up in value, which tells you you just don't have a lot of inventory. I can tell you there's not a lot of inventory where I am here in Southwest Florida, and it's in high demand down here. A lot of people still moving down here. A lot of people come from the Midwest and Northeast, and there's just not enough inventory. Builders are still building. They're slowing their building, but they're still building here, and things are still going for solid numbers here. A lot of cash buyers. You see the number of homes sold are down 26% roughly, but the price is up 5%. Inventory is down. Days in the market, 56. That's up 27%, but not huge, right? And things are selling for near asking price. And you see where the hot markets are here in Florida. And there's quite a few, and where people are looking to go. I mean, most of Florida is pretty hot, but some spots are hotter than other areas are. And I think I've hit everything I've wanted to on this. Zillow has some nice data where the home value index, obviously Miami, where a lot of people are going to, is up a bit. But here's some other areas where the home value index here is surprising. Oklahoma City, Hartford, Connecticut, Cleveland. Some pretty interesting numbers here. Definitely something good to look at here and where it goes negative at. Obviously, when you get into California, you got a lot negative. Austin, Texas. These are the markets that are getting hammered right now also. Can't think about that, right? These are the markets getting hammered. And as soon as we have high unemployment, Las Vegas will get hammered even more than any other area on this. All right. I'm going to stop my share. And thank you all for whoever was on this broadcast here. Thank you for watching. Appreciate it. And hopefully you got something out of it. And I'll try to do some more of these lives. I do like going live here and just giving data as I see it here. And if you do like it, make sure you subscribe to the channel. And we'll catch you on the next video.